to turn your 3 lakh to 30 lakh to go into a journey of a 1 crore. How did the position sizing work there?
What you speak to yourself is very important.
Has it happened to you that there was a trade and maybe algorithmically something went out?
Understanding will come only after you trade for a while. It won't come in initial days. When you are losing parameters or within that structure, you need to understand this is part of trading.
What parameter he should be looking at to decide, okay, this one I should go live with. Welcome back, friends, to second episode of Mind, Money and the Machine. As you would have known, this is a different podcast. Here we talk about systematic traders and the journey of a systematic traders and the 3 important pillars which makes a systematic trader successful, which is the mind, the money and the machine. So today we have a very interesting guest. Trust me guys, I was actually little bit afraid to call him because he is my guru and I've learned so much from him. What he has done with many traders like me has give the perspective to trade and give the right mindset to trade the markets. So with this, I would like to invite Madan.
Madan hails from Chennai. After completing his degree, he went to the United States for higher studies, where he first stumbled upon the world of trading in 2006. Like most young traders, his early journey was full of experiments, and yes, a few blown up accounts along the way. But in 2009, he made a big decision. He packed his bags, boarded a flight, and came back home to India. That's where his serious trading career really began. From then on, Madan immersed himself in the markets, trading Nifty and Bank Nifty futures, testing strategies, and learning the hard lessons the market teaches every trader. By 2018, he too went through that phase every trader dreams about, trying to conquer intraday, thinking it's the fastest way to make it big. But here's what makes Madan stand out from the crowd. While many move in and out of trading styles, Madan has been committed to systematic trading for 17 years straight. That's nearly 2 decades of discipline, process, and sticking to a framework through every bull run, bear market, and sideways grind.
So let's talk about the most important pillar, and I think so you are the best person to ask this question is about mind, which we talk about psychology. So Madan, I've been hearing that you need to build your psychology according to your styles. How much the fact is there?
So basically you're asking whether we need to build a system based on your psychology.
Yes.
Okay. It would be really lame to say that, yeah, you build a system based on the psychology, because why it is lame? Because we need to understand what psychology means, right? Because without knowing what that means, there is no way to build a system around it. So what is the trading psychology? I think in my opinion, what happens usually is people take various kinds of instruments, start trading randomly looking at a YouTube video or some kind of tweet, some kind of Instagram video, right? But unfortunately what happens is after some time they figure out that's probably not their cup of tea, but they will not figure out directly. What they will figure out is that it's not making money for them, something is missing, right? It's not only making money, you don't belong to that particular style of trading. That's what they start to feel. Right. So that is when I think the system based on psychology kicks in, wherein you get to a point where the trading psychology is known to you. You are not able to probably hold an instrument or hold a trade more than a couple of minutes, then probably you're a scalper, right? But if you're able to take an overnight risk and you don't like the gyrations that happen intraday, you're not probably an intraday trader. So that kind of understanding will come only after you trade for a while. It won't come in initial days. If somebody comes to you in initial days and say, hey dude, let's build a system based on your psychology, he's going to ask what is psychology? Because all he's focused on is strategies in the initial days. So this will happen only after some time, only after people realize that, okay, I might be lucky making money here, but something is amiss. It's like going to a job every day, but you're feeling very drained out coming out of the job. So that something is missing in the job outside of the money, right? The same way, in my opinion, the psychology based system building will come only after a certain time. It won't come initially.
So you have to trade to figure out what's your style of trading.
Yes. Without trading, it's like without swimming, you cannot really say I like breaststroke more than freestyle.
Right.
It's not going to work.
So you have to work that out. So one of the challenges that any systematic traders or any trader for that matter, they get associated with the losses. That if the losses are happening, that's me.
Yeah.
And how do you differentiate? It's not me and it's the system. Like what should I think in that direction?
Yeah. So it's a good question. See, basically, you're asking why people associate themselves as a loser when losing streak happens or when losses happen.
Right.
I think that's your question, right?
Yes.
So yeah, people usually do that because see we somehow take ourselves very seriously. I mean, I always tell this to people: don't take yourself very seriously. You are just a small, tiniest speck in the whole universe spectrum, right? So, but we take ourselves very seriously. So when we have 2 or 3 losses in a row, and when we have some kind of losing streak that happens, we kind of equate that to maybe I'm a loser. That's why I'm not able to probably do this. So I'm going to bifurcate this answer into 2-fold. The first fold is going to be what you speak to yourself is very important. You cannot have a negative mindset and go anywhere in life. Like for example, let's say if somebody keeps telling to them that I'm bad at coding, that's going to reflect in the actual coding world. When you start learning coding, your mind is always going to keep telling your subconscious mind that, hey, you're bad at coding, because that's the feed you're giving into your own mind. So when you think that you are a loser to yourself, for whatever reason, it could be your upbringing, it could be your teacher told you in a very casual way that you are a loser, you might probably take it to the heart. You start thinking that you're a loser. When losses happen, because everybody wants only profits, nobody wants losses, right? So when losses happen, somehow we start feeling that the other guy who is in Twitter, other guy who is in YouTube, is making money every day. I'm just seeing green as P&L, whatever flowchart from Zerodha, I'm just seeing green all the time. But I'm having losses in my own trading, then I should be a loser because everybody else is winning, which is far from the truth. Everybody will have losses. Everybody will have downtime. Everybody will have slumps. Just like, even Roger Federer has slumps. He's going to have a performance issue, once in a while. Take Virat Kohli, for example. He had a huge slump and then he recovered, right? True. So every performance artist, every performance sportsman will have some kind of slump. But the moment you take that slump into your heart, there is no way to recover. So what you tell to yourself matters. That's the first part. The second part is when you get to the point of hey, this is what I'm willing to lose in the markets. This is the maximum I want to lose in the markets based on your backtested system, based on Monte Carlo simulation and whatnot. You have come up with a system with the maximum parameters. When your losing parameters are within that structure, you need to understand this is part of trading. It's like running a restaurant. Let's say you make 50 kgs of sweet that day and you're selling only 30 kgs of sweet. You have to discard the 20 kgs into the trash can, right?
True.
But if you are a restaurant owner, but if you're not willing to discard your leftover sweets, then you should not be in restaurant business, because there's no way you're going to make the exact amount every day what you're going to sell. Oh. So it's not going to happen. So you need to understand that there's some kind of wastage that can happen in restaurants. The same way in trading, losses will happen. That does not make you a loser. What we need to think is the bigger perspective, wherein we need to see whether we are coming out green at the end of a quarter, depending on your time frame, end of 6 months, end of a year. True. So we need to have the larger picture in mind. Losses are part of trading. You are not a loser just because you have losses.
Brilliant. So don't equate yourself to your trading streak.
Absolutely not. And watch out what you're telling to yourself. Yeah. Because the more negative mindset you have, trust me, you're just digging your own hole.
Okay. So one way of finding it out whether I can sustain this losing streak, or maybe I learn from my mistake, is trade journaling. And that's what is, there is a lot of talks about it. Yeah. So are you an advocate of trade journaling, or are you not in favor of trade journaling?
No, I'm a big time proponent of trade journaling. Proponent meaning advocate, right? I support trade journaling. See, the journaling will teach you a lot when you're a newbie, actually. The journaling might not teach you a lot when you're an experienced trader and doing the same thing for several years, right? So let's stick to that. That's the first point. The second point would be journaling can be done on the trades you're trading so that you can go back and see what you're doing, right? But if you're a systematic trader, journaling will not help you that much, especially if your execution is really really good. Like you're 100% execution person, right? You are able to execute all your trades without any glitch. Let's say the entry, the position size, your exit, everything is set, everything is going by plan, you are able to efficiently execute it. Then the trading journaling numbers might not help you unless you want to just see where your drawdowns are, where your P&L is and stuff like that. That's the systematic trader stuff. That's the second point. The third point is when you're a newbie, I think journaling the emotions might also be very helpful. That's where probably you will learn what kind of emotions you are going through when the market is going against you, coming near your stop loss. You have heard a lot of people removing the stop loss, right? So that does not happen, without any thought that goes in your mind, because thoughts come first, then action follows. So the thought will be probably like, why not I just remove the stop loss so that market comes down to my stop loss and then again goes back up. That's what people are thinking, right? So you can jot down those emotions. You can jot down why you are prematurely coming out of your profit targets if you have a target. Why you are prematurely coming out of when your P&L is green, suddenly people will have some kind of shaking feeling that, hey, I need to come out because I'm in a proper green P&L. That usually happens when the market went against you a bit. You have seen negative P&L, red P&L for almost few minutes, few hours, and then it comes back up to the green. Immediately you start feeling the jitteriness that I need to come out. So if you jot down all these emotions, we will be able to understand that, okay, these things happen to me. First of all, you need to be aware that these things happen to us. So awareness is the first step. So because awareness has happened, we can work on it. But if you're not aware, the Alcoholic Anonymous groups are there, right? AA. They always say this, if you're not understanding or being aware that you're an alcoholic, you will not come out of alcoholism. True. Because if you start telling to yourself, denying to yourself that you're not an alcoholic, why would you come out of alcoholism, right? So you need to first accept that some things are going on. You need to be aware of the emotions. So jotting down the emotions will be extremely beneficial for newbies. Right. So the journal can be for the trades. The journaling can also be for the emotions. For the newbies. Third point, right? Fourth point, the last point. For discretionary traders, it will be tremendously, immensely useful. Because they can really figure out why they were not able to follow their own plan or why they were able to prematurely coming out of. See, discretionary traders also have plan. It's just that they will not execute it the way it is supposed to be executed like a systematic trader, because their mind kicks in, they will implement their mind and then they'll probably come out early or get in early or something like that. So for them, jotting down the trading journal, whatever your trades and why you came out and stuff like that will be tremendously helpful.
Wow, okay. So jotting down the emotions is something that again we always talked about journaling of trades, but not the emotions. The emotion takes out the best out of it. So does an systematic traders, they say like, it removes the emotions. If you are a system trader or an algo trader, it removes the emotions. Yeah. But I've been a systematic trader and algo trader, it has not moved out of me. Yeah. So does it really do that?
No, that's a popular misconception. It's like removing your blood and asking Vishal to survive. Okay. You will not survive. How will you survive? So emotions will be there. See, when somebody says I don't have any emotions, that's a pure liar you are sitting next to. Right? Nobody can, completely take out emotions. Even the saints who are sitting in Mount Everest, they are not able to take their emotions. So that's why they are sitting there forever. Because they want to control that. So we can control, maneuver the emotions. So as a systematic trader, you will still go through drawdowns. You will still go through the mental maps of, what will happen if this continues for 3 more months, 6 more months. The mental maps will keep coming up. So the emotions will be there. But what will happen as a systematic trader is, probably you will not be very emotionally charged up when you want to execute something. Right. Because the execution is also systematic. True. So you will not go through the dilemma of whether I need to enter the trade right now or not. So they'll be very good at execution side. But trading wise, emotion wise, whatever you're going to go through during your losses and windfall profits, that's going to be very common between systematic traders and discretionary traders. It will be there.
It will be there.
So it will be there.
That's if somebody is telling you that algo trading removes emotion, it's
no. Okay. It removes the emotions that is accompanied with the execution side.
Yeah. Brilliant. So with this, I think we have covered how a psychology of a trader comes. Yeah. Now comes even more interesting part is money.
Oh yeah.
Every retail trader is of a dream that I want to trade it big. and I think so the position sizing or money management or the strategies around it plays an important role.
Correct.
So let's dwell a little bit on that part of it. I remember you turned your 3 lakh to 30 lakh to go into a journey of a 1 crore. How did the position sizing work there?
Okay, I just want people to forget that whole experiment because a lot of people try to follow that and they burn their account. It became
Which is very good. I think so. It should be.
Yeah, it became very infamous, but
Yeah.
because you are asking, let's delve into that.
Yes.
The position sizing was, first of all, we need to understand, I mean, the whole thing was actually recorded online through my tweets, right? So 3 lakhs was, first of all, you need to understand 3 lakhs is very small, minuscule part of the net worth of an individual.
True.
In my case, it's me, right?
Yeah.
So if you're putting, if let's say your net worth itself is only 10 lakhs, and then you're putting 3 lakhs for this kind of experimental trading wherein you're going to risk a lot in each and every trade, that's not going to work. Because again, your emotions will take the best out of you.
True.
So the net worth is, let's say, 100 rupees, and if you're going for an experiment with high risk trading, probably 1 or 2% you may want to put, less than 1%, just as an experiment to see how it goes.
Right.
So my initial position sizing was, the risk was huge. I do not know the numbers. I don't remember the numbers exactly. Let's not get into the numbers.
Yeah.
But it was high, really high. If I lose, I'm going to lose like, on a streak of losses.
Right.
I'm probably going to lose like 50-60% on a streak of losses.
Streak of losses.
I'm willing to take the maximum 50% loss of the account size.
Okay.
So my position size was based on that parameter, right? But as the days went by, I think I tried option buying first, then went into option selling, weekly option selling, monthly option selling. I mean, basically monthly contracts. And then I went into synthetic futures because it's an experiment. I can do whatever I want to do because I'm free to do that, right?
Right.
I had the luxury to do that.
Right.
So when it came to that point, I was trying all kinds of different forms of trading, synthetic futures, and then again went back to futures. Then came back to option buying eventually. The reason being I want to experiment everything.
Right.
Then I figured out, I was very bad at timing the markets because when the VIX was going down, I was actually doing option buying. When the VIX was going up, I tried option selling. So the timing was always bad. But the experiment is an experiment.
Yes.
That's why it's called
That's
experiment.
what it's called.
That's why it's called an experiment. And then because the outcome can be anything.
True.
Because we are trying to learn something out of the outcome.
True.
So coming back to the point, I think it went really well from 3 to 30. But unfortunately, what happened was the option selling was in a bad timing. Synthetic futures was okay, but it was taking out a lot of margin. I mean, you know that because there's a sell side and the buy side. So eventually, I came back to option buying because I was into momentum play. So option buying suited it well.
Sure. So a young trader started his trading journey
Okay.
and want to grow up his capital. What will be the one of the routes that you
Okay.
can suggest to him?
Yeah, a young trader like you, if they want to start trading.
Yes.
So yeah,
Yes.
I like the smile.
Yes.
So young trader like you, if they want to start trading and they want to make money, the first thing they want to do is they should not think about making money.
Oh, nice.
Yeah, this sounds like a very cheesy statement to make, but it's not cheesy because the more you focus on the money, the more you will deviate from the process. Because the process is very important. You need to understand, see, to have some kind of trading success, it's like a concoction. It's like, making biryani. I always take this example because biryani is not just made with rice, biryani is just not made with meat. If you're a non-vegetarian, biryani is not just made with the spices, it's just not made with, other things.
Yeah.
It is made with the right proportion as well. So
For
everything has to come together in the right proportion. Otherwise, if you just put enough water, the biryani rice is going to be perfect. If you put more water, you're going to have, smashed rice, right? The same way, trading is also a concoction of a lot of things. It comes to capital. That's why it's called capital markets. You need capital.
I remember that.
Yeah. The second thing, you need some kind of backup income or money or a rich father-in-law for sure. Third thing is you need a lot of patience because things will not happen in a jiffy. I tried this 3 lakh to 30 lakh experiment after trading the markets for almost 12 years.
Wow.
I didn't do that in my first year, right? So that kind of understanding has to be there. Patience, you need patience. And you also need the trading psychology, resilient trading psychology, where you bounce back whenever you are down, right? we are all very good bouncing back, but unfortunately when it comes to trading, we kind of think, as you said, we associate losing with losers. We think we are losers and that the negative spiraling happens inside you. So all those 4 or 5 things has to come together. When it comes together, probably, this is a statement I want to make, probably you might have a go at the success. There's no guarantee.
Surety.
There's no guarantee.
There is
no guarantee. Remove the word guarantee from trading. There is no guarantee. Even SEBI does not like that word. Right? So remove that word, and we also don't like that. There is no guarantee in anything in life, and more so in trading. So when it comes to trading, if you're coming up as a new young trader, I am assuming that you probably will not have enough money, enough capital. So I would actually highly recommend people to accumulate capital. At the same time, while you're accumulating capital, start getting some experience in trading, because that's when you're going to understand your own psychology. That's when we talked about building your system based on the psychology.
And maybe make some mistakes or learn from them.
Make a lot of mistakes, because mistakes are the places where you're going to learn. Mistakes are the opportunities to learn, actually. So you're going to make a lot of mistakes at a smaller scale. You also keep accumulating capital. You also keep understanding your psychology. So eventually you come to a point where you will start building your system based on the psychology, and it will make a lot more sense on what we are talking to them.
Oh, brilliant.
At that point.
At that point. So when we go and start trading, we visit a lot of YouTubes, we visit a lot of websites, and when it comes to the risk management, the capital management, the common thing is you should not risk more than 1% of your capital or 2% of your, why 1%, why 2%, why not why cannot risk
why
more?
Not 5%, why not lesser than 1? So good question. See, so the recent trend is people go to Instagram, and then what they do is they look at a video which is propped up, because of advertisement or something. So you look at the video, somebody says, hey, I made 10,000, I have 10,000, I made 1 lakh from that 10,000. They buy some out of the money option, and then it just goes 50 times or 20 times or 30 times. So I made this kind of money, and people just get lured to that. I'm going to use that word lured. People get lured.
It is what they do.
And I remember reading this book, some trading book from Alexander Elder. So he was talking about the 2% risk. That was the first time I read it in a book. Somebody might have written it before that, I don't know, but Alexander Elder was the first person I read it from. So it's a very blanket statement where people say that, hey, I want to risk 2% of my trading capital. Because what they're assuming is they're not going to have more than 15 or 20 trades in a row as losers. But if you really look at, I don't have a whiteboard here, but if you really look at it, if you have a 30%, 40% win rate system on a sample of, let's say, 10,000 trades, you're going to have at least 25 to 30 losers in a row. So if you risk 2%, 25 to 30 losers in a row, let's take the max, which is 30 multiplied by 2, gives us 60% of your capital gone. Poof. So how many people can take that kind of drawdown, 60% capital, and still go ahead and put the next trade? Not many, right? So that is why I think the risk management should be in a way that wherein you got to take it from the back-tested parameters. You should not be a blanket 2%. Some system might have a higher win rate. You might want to risk a little bit more. So you either you are suboptimally risking or you are over-optimally risking. You are over-risking or under-risking. So yeah, that's the answer.
You mentioned about the streak of losses and blowing up an account, but you had a string of 17 losses in a row. What really made you come and trade the 18th, and what were the things that you were 17th did at any given point of time? Let's be is my system traded perfectly, or did I execute it properly? Did that came to your mind?
Yeah, absolutely. I think it was back in 2017 or something, if I'm not wrong. 17 losses in a row, right? That is not a big deal, because recently I got like 28 losses in a row.
Wow.
Yeah.
And you came and traded the 29th trade.
Yeah. That is because of the pure understanding that this kind of win rate will have these kind of losses in a row. If I don't have that understanding, how will I do it? See, for example, let's say you're learning to drive a car. So if you steer the steering to the left, the car has to move to the left.
Right.
Assuming you're in the front gear, not in the reverse gear. When you're steering to the right, it has to steer to the right. For some reason, you do not know this basic of steering wheel. How would you drive a car? You will not be able to, because there will be no confidence.
True.
In driving a car on the road. The same way, when you do not understand that my particular trading system is going to have this kind of streak of losses, it is well within my streak of losses, my win rate, my system's win rate streak of losses, I'll be able to, execute it. I'm not saying it's easy. There has not been a day after the 11th or 12th loss. There has not been a day, there has not been a trade where I doubted myself. The doubts will be there, but it's still some kind of hold you can have. The hold is your backtested system, your win rate, and there is a maximum 30-35 losses in a row can happen.
True.
Losses in a row can happen.
True.
So that made me going. That is what made me put my 18th trade.
Wow.
That is what put my 29th trade recently.
Again.
Yeah.
So Madan, we talked about mind, we talked about money, and the most important part that everybody gives attention to is the machine, the strategy, the logics. So I have known you for like good years now, and I've seen you using only one format of trading, which is structural pivot. Is it still working?
Yeah, it's a trend following concept, so it's still working, yes.
So can you just give us a little bit elaboration of what is structural pivots or what is pivots in the market?
It's basically based on Dow theory.
Okay.
So higher highs and higher lows, lower highs and lower lows. So it's like a steps, right? So you want to, let's say there are steps that goes upstairs up, some stairs down. So let's say a vehicle is going upstairs, like going up, or a vehicle is coming down. So you want to get into the vehicle when the vehicle is going up, get into the vehicle, and then come out of the vehicle when the vehicle starts going down. Because market gives you money when you are participating in a rally. Market also gives you money as a future and options trader when it is also going down.
Right.
So whenever vehicle is going up, you want to get into the vehicle, come down when it starts going down. Again, you get into the vehicle when it goes down, come out when it stops going down. So that is the whole idea of trend following.
Wow.
So yeah, structural pivots can do that. A lot of things can do that. Structural pivots is the way I trade the markets.
Okay.
It doesn't have to be that way. It's a trend following concept, nothing bigger than that, but it's based on Dow theory and based on the example.
So no indicators,
no
only
indicators.
price action.
Yeah, only price action, yes.
So you could have traded this manually as well. Why did you prefer to have an execution of that system?
Yeah, so I was trading it manually for a long time actually. The reason why I want the execution to be automated is basically, you cannot be in front of the system possibly all the time because the market opens at 9:15, closes at 3:30. We have 6 hours and 15 minutes. So that's a lot of minutes. So in between those 6 hours,
you can go to washroom.
Yeah, we can go to washroom, we can go to the next room, we can go to the bedroom, we can go to all kinds of rooms we can go to, right? So, but you cannot be fixated in front of the screen all the time. I mean, I did that for a long time, but it was getting on to me eventually because it was wearing me out and I was not growing any more younger. I was growing older. So I was not able to do it well. The manual execution was giving me some kind of jittery feeling all the time because it's all about missing one trade. In trend following, it's all about catching that one trade, which is going to recover all your drawdown and much more. True. So if you miss the trade, your whole year is probably down or your whole quarter is probably down. So you don't want that, right? So that's why the execution got automated. So yeah, that's the idea.
So let's take an interesting twist to this answer that you have given.
Yeah.
That one trade that can, if you miss it,
make or break
you kind of miss out the train or maybe mess up your year as well.
Correct.
Has it happened to you that there was a trade and maybe algorithmically something went out? There is so many combinations that a broker can go and go down or a API can go down.
Yeah, it has happened a lot actually. While I was trading manually, I have missed trades. I'm not an 100% execution person. I was not able to do it. Probably 95-96% because we will miss some trades and depending on the frequency of trades too. If you have 2 or 3 trades a day, I can guarantee you this, you will miss out trades.
Right.
Or you will go a little bit later because you're manually entering.
Right.
Yeah, Algo will have its own afflictions, own difficulties. The first affliction would be your broker going down or your API is going down or for whatever reason your Amazon server also go down, AWS goes down or your code is having some kind of error which you did not realize until the last 3 or 4 months you are running it.
Right.
This is the first time it's happening.
Right.
So a lot of things can happen. So somebody has to anyways monitor. Automation does not mean that you can put it and go to Hawaii. No, you can't do that.
Right.
So somebody has to monitor. Maybe it's not you, maybe it's your employee. Somebody has to monitor and somebody has to see whether the trades are being taken the way it was supposed to be taken.
Right. Madan, when I met you, you said do your backtesting manually, and we are the young Gen X who puts the code into Python, who puts code into Semi Broker and try to run it and just think that money is going to flow. Manual backtesting versus a software backtesting gives you which one,
because things change. So when we have this radio, we never thought about listening to any kind of music in Spotify, right? Nobody envisioned that. So we need to adapt to the changes. So when I was promoting manual backtesting, because I want people to understand that markets can gyrate from up to low, low to up, high to low, all the stuff. And I also want people to understand the cycles the market goes through. So the manual backtesting can give you a slight idea, even though you might not be experienced like the other person who's been trading for the last 15 years. The backtesting can actually go through the same chart for you, even though not in real time, the cycles, at least you can understand the cycles like the other experienced person. So it was pretty beneficial for people. But now as the technology advanced, people moved on to automated backtesting, people moved on to getting results within a couple of seconds, which is understandable. But in my opinion, I am not going to say manual backtesting is better than automated backtesting. All I'm going to say is manual backtesting has a little bit that edge wherein you can understand the market cycles, because automated backtesting is just going to throw out numbers, like an assembly line, right? Like cars are coming out of the assembly line without even understanding what's going on. The same way, the numbers will be there. You can probably ascertain what kind of parameters are coming out, whether it's probably going to be a positive expectancy system or not. But outside of that, the manual backtesting is probably going to give you the edge wherein you can understand where the market has gone through, what happened in 2008, how the markets behaved on a day-to-day basis when Fannie Mae and Freddie Mac was going down. So all those things we can probably understand. So that's a bit of an edge. So if I were you, if you are starting out, like you said, Gen Z, do the automated backtesting, nothing wrong with that, but also go to the manual charts. It will probably give you more experience than a person who is just doing automated backtesting.
So check on the drawdowns or the periods where there is a consistent of profit and losses.
Correct.
And visually actually get a feel
go through
of
the chart. Go through the chart.
Go through the
Especially if you're a trend following trader, there is no alternative to screen time. Absolutely no.
Wow. But if a new trader has been given, or maybe he has researched 2 or 3 or 4 different strategies, what parameter he should be looking at to decide, okay, this one I should go live with? Because in this arena of too many strategies, we know that you have been doing it but you have experience talking to a lot many traders. What insights that you can bring along in terms of that there are 4 strategies, which one should I go for? Or maybe,
see, usually what people do, especially in the initial stages of their trading, is they will go for the maximum returns strategy. Let's say somebody is giving you 40%, something is giving, some strategy is giving you, B is giving you 50%, C is giving you 70%, D is giving you 120%. They will close their eyes and pick D. Then comes the point where, okay, at the cost of what? Are you going through 60% drawdowns to take to 120%? Are you going through 30% drawdown to go to 120%? So that risk will come into play. So that's when this Kalmar ratio comes into play, wherein Kalmar ratio is basically the ratio between your risk and the annual return, the maximum drawdown to the annual return. So let me put a scenario back to you, right? So trader A makes 50% with 10% drawdown. Trader B makes 120% with 40% drawdown. What would you choose?
I would choose trader A.
Trader A. Why?
Because 50% and 10% drawdown.
The ratio, 1:5. Here the ratio is 1:2.5 or something, right? Whatever number I quoted.
Yes.
So this is pretty simple, the first point. So look at the Kalmar ratio. And look at the win rate. Some people cannot, some people cannot take the number of losses in a row. That kind of losses. Because the lower the win rate, the losses in a row will be much higher. And because you have a lot of losses in a row, the time it takes to recover from the drawdown, it's called time drawdown. The time drawdown will also be much higher. To recover, let's say you have lost 20 lakhs out of 1 crore. To recover back the 20 lakhs, let's say it takes 6 months. Some people may not be able to wait that long because they'll start questioning themselves. The opportunity cost, they'll think opportunity cost. See, I have made nothing in the past 6 months. My next door neighbor has made 30 lakhs in his job. So what am I doing? So comparing with the next door neighbor, right? So all those things will kick in. So win rates are important. The third point would be your risk reward, which comes into play. The fourth is a time drawdown. So how long it takes to come out of maximum drawdowns. Your average drawdown will be known once you backtest it for several trades. So your average drawdown takes, let's say, 3-4 months. You should be aware of that. So whatever makes you comfortable. See, people always want the best out of every parameter, but that will not happen. You will not get the best out of every quality you're looking for in a person as a spouse. There's going to be some kind of there's going to be some kind of compromises here and there, which is quite normal. That's how it works. You're not going to get everything. Then somebody has to be made from heaven and has to be put next to you, right? So that's not going to happen. So the same way, you will not get the best out of parameters. Whatever you feel important, these are very important stuff for everyone. But outside of this, you need to understand whether you are comfortable with the other parameters. That's all.
So then you touched upon a very important point of a time drawdown. Okay, and I'll ask you that, okay, when you are in a time drawdown and even price drawdown, because there are two drawdowns that can kill you. The position sizing. Because when you are in time draw or a price drawdown, people say that you cut your position, but then capability of making that money back is increased.
It will take longer time.
So does it make sense to just continue with the position size, or I know it can be different for different people, but what would be the two different scenarios here?
It's a very subjective to the trader, like you said. Most of the people will reduce their position size when they are in a drawdown. The reason being, you will never know when the drawdown will stop. See, let's say we know that the drawdown will stop at 30%. Let's say we are at 10% drawdown right now. So it is prudent enough, because you know it's going to be 30%. You'll be prudent enough to stop reducing the size, or you'll stop trading because you know.
Because your psychology is
because you know 30% is the max. But unfortunately, when we are trading, we don't know that when the drawdown is going to stop. So it is comfortable for their psychology to reduce the position size. But everything comes with a caveat. The caveat is it's going to take more points, more time to come back to break even, because you have reduced the size. Right? So that's the caveat. But if you do not reduce the size as we go on, deep into the drawdown, what's going to happen is you will recover fast when the market recovers and market gives you points. But at the same time, you will also lose fast enough or move towards your max drawdown fast enough. So there's a caveat. So you can't have the cake and eat it too. The same way, you cannot have this and that together.
You have to decide which one you
are comfortable with. That's why I said subjective to the trader.
Brilliant. So Madan, I know that you are a full-time trader and a lawyer, which is very, very not heard of in the streets, I would say so.
Weird combination.
I don't know whether you are arguing with the market or not arguing with the market. But what is the life outside? Why you should have a different hobby outside the market hours?
Okay, good
and
question.
Not hobby, but maybe as a personal life.
Anything to pursue on. Right? Trading can be your full-time profession. Trading can be your bread and butter. Nothing wrong with that. But see, I always tell this to people: if you are into trading for a long time, usually what happens is trading gets to you. A lot of people jokingly say you can take me out of trading, but you can't take trading out of me, right? Something like that. So trading will get to you, it will engulf you, it will encompass you like an octopus, right? So eventually it will come to a point that you will start telling to people that I do not know anything outside of trading. So that also means that they do not have any kind of hobby, any kind of recreational activity going on, because for them recreation is researching on the next strategy. Recreation is how to build my trading business to the next level. Which is not wrong, because that's what every professional does, that's what every business owner does. But at the same time, trading is a very peculiar profession, because trading is the only profession I know of where every second gives you an opportunity to make a lot of money, lose a lot of money too, every second.
Every second.
Yeah, because it depends on your position size, it depends on the market direction and stuff like that. And the worst part of trading is it gives you hope every second too. None of the other businesses I know, none of the other professions I know will give you hope every second. Because in this profession you can get that hope. You can actually get into the trading today. Let's say you have 1 crore capital. You can get into trading today and dream about making 1 to 1.5. You cannot say that about any other profession. So because of that particular trait inside trading, it's going to engulf you.
Okay.
Because we are all full of avarice. Avarice means greed. We are all full of avarices. We are all full of ambitions. And trading can actually feed that particular animal inside you. So that is why I keep telling that, yeah, trading is a great profession. You can have it full time, but don't be on it all the time. So you need to have something outside of it. I just had some other profession outside of trading. You don't need to have a profession, but you need to have a life outside of trading.
Yeah. So that's what the famous, I think Sir Edward Psychota says, everybody gets what they want from the market.
Correct,
so sometimes you are looking for things, you'll keep on going into that thing again.
Correct. It's like a quicksand, right? It'll keep pulling you in. That's what Bhavya was telling, right? A lot of people have quit options from the Indian markets, but they're trading outside India.
Yes.
So once a trader, always a trader. I have never seen people quitting. They quit temporarily, but they keep coming back.
Right. So let me ask you on that recent phenomena of the Indian options market has become very difficult, or maybe at least some of the traders like me which face that challenge. Has anything changed?
Yeah, regulatory wise, a lot of changes, you know that.
Yes.
I think there are a lot of participants in the market now. So many people are into easy money making conception about option selling, which is okay. Option selling has some kind of edge, which we all understand. But too many players, it's like, too many ants will spoil the porridge, right? So the same way, too many people, I think, is fighting with each other because it's a zero-sum game. Some people call negative sum game because of broker commissions and stuff like that. Let's stick to zero-sum game. Yes. So you have to lose for me to make money. Right. Not necessarily you, somebody else, right? One other person has to lose. The same way, I think it has gone to a point where people are fighting with each other so much. I was just giving that example of cars and the road and stuff like that. Right? Too many cars on the road right now because making cars are very easy. Everybody is bringing their own car and fighting. Right. Initially, it was not that difficult to make money in the markets. Right now, it has become very difficult. Regulatory changes are not helping. Okay. But intraday, I think it's very difficult now, whether you're a non-directional trader or directional trader. But positional wise, it is still okay because if you're following trends, the trends are still happening one way or the other.
Yeah, as the old saying goes, trend is your friend.
Yeah, trend is your friend until it bends.
Yes. Yeah. So Madan, post 2020, a scenario about trading has changed in terms of everybody thinks it's easy money to be made in the market. Yeah. Is it so easy?
No, it's not easy. See, if it is easy, I think one of our cameraman here has done Ambani wedding or something. So, Ambani will also be in trading. Yeah. Maybe secretively in trading, I don't know. Okay. It's not that easy. Any actual real-time retail profession, the margins are around 10 to 15%. That's the profit margin, not more than that. Trading is also, something similar, but it depends on the risk. So everybody has said this. Trading is simple but not easy because the steps involved are very simple. The reason being, it's very simple to go and open an account. It is very simple you don't have to register in MCA to open a company. Yeah. All you need is an individual PAN and a KYC and your broker will open in 2 hours because now eKYCs are there, video KYCs are there. Opening is easy. Putting the money from your bank account to trading account is simple as 2 clicks. And then going into the market, okay, Nifty is here, okay, SDFC Bank is here, let me go and buy it here. They'll just buy it, they'll just come out. If you make money, yeah, great, happy.
I'm smart.
Let's go to dinner today. If we don't make money, I would just want to go to the corner of the room and cry, right? So it's easy, simple, not easy, simple. Every step is simple. But making money consistently is not easy. It is not the way it is being shown in Instagram and YouTube. No, it is not. Absolutely not. Yep. Everybody has an agenda on Instagram. Let this be Madan's quote, like get Sikuta's quote. Everybody gets what they want, like everybody has an agenda in social media.
Everybody has an agenda on the social media.
Absolutely. Awesome. Nothing is free.
Nothing is free. So Madan, when we started out this podcast, everybody was talking about systems. In the general word. But when we thought about it, it was mind, money, and the machine, or the
Right.
strategies. If I wanted to give you 100% to you to allocate as a trader, how much would you allocate into these three segments? What is very important? What is less important? What is more important?
Okay, if you ask the same question to me 15 years ago, I would say strategy.
Okay, 100% to the strategies.
90-80%.
90-80%.
Yeah,
okay.
money, you need money to,
Yes,
trade. I
obviously.
mean, come on, it's not going to come out of thin air. Right now, if you ask me, I would say money and strategy would be equal footing, probably, I don't know, 20%.
20%.
I don't know how to quantify that.
Okay, there's no
Let's say 20,
quantification,
20,
but
30%.
on a
or
broader
something.
level,
Yeah,
yes.
20-25%
Right.
each. The mind is going to be 50%.
Wow.
Because mind is the place. See, the battle is always between the 2 ears,
Yeah.
the mind. That's what everybody says.
Yes.
The mind is inside you, not outside you.
Right.
So, as I said earlier, what you put inside your mind matters. So you need to talk carefully. You need to, whenever you're alone, you should not let your mind go through the negative thoughts. So mind matters. So from the trading perspective, emotional control, emotional intelligence matters. So that will not happen in 1 or 2 years. It will take some time. But after some time, you will understand, what kind of strategic solutions you can bring upon to control or to handle your emotions. That is very particular to person.
Wow.
I mean, nobody can give you a silver bullet solution for that, because once you gain experience, you'll also gain this.
Yes, and psychology plays an important role.
Yeah,
in
I would
that,
say
yeah.
50%.
Wow.
Yeah.
Brilliant.
Yeah.
So thank you, Madan, for this insightful session. And what I really liked about this session is that there are a lot of myths around trading, algo, that you said, no, it is not true, which is sometimes is very important to put it out, saying that, okay, you know what, this is called capital market for a reason, because you need capital. Trading is not for everyone. These are some important points that I am going to take with me, and I'm sure our audience would also take with them.
Yeah.
So thank you very much for doing this, Madan.
Yeah, thank you. So I want to put a long thank you note, so please do not edit this. I want to actually register this point that I have never done a podcast before. I just did a podcast 2 days ago, but that's because Kribagaran asked.
Yes.
But yours is the first podcast I accepted to.
Yes.
A lot of requests have poured in, but I never accepted a podcast. The reason being that I'm telling the same stuff.
Yes.
But this podcast is a bit special to me because the host is special.
Thank you.
The sponsors are special. Share India, it's very special to me because I remember going to their Goan conference, and the way they treated their guests, it's phenomenal actually.
Yes.
And thank you so much for the back-end team. There are so many people working. I want to thank Bhavya, Dhruvin, I guess that's his name. I want to thank Avish for all the logistics. So thank the whole team. I want to thank you. I want to thank your spouse as well. The reason being because she has let you do this.
Yes.
Being a Saturday, she didn't ask you to stay with her, but let her do it. So thank to your spouse. I want to appreciate all the listeners here because most of the times I talk mumbo jumbo. So
No, you didn't.
yeah, so I appreciate for listening, and I could not believe that the 45 minutes, 1 hour just went by in a jiffy. So it just went really well, and thank you so much for the opportunity. I really appreciate it.
Thank you, Madan. Thank you very much.
Yeah, take care.